There are a bunch of investors, very famous investors, where every 3 months they have to file a 13F. Tons of market participants and just general retail investors look to these super investors for guidance in what they should potentially buy. We're going to look at a couple of these 13Fs today. We're just going to see how things are moving, see what's going on, see what the big guys are doing. Renaissance Technologies was a company founded by Jim Simmons. At the end of the day, this is a quant firm. So this goes out and buys and sells companies based off of a proprietary investment framework that is developed in-house by Jim Simmons. Jim Simmons obviously was a mathematician at heart, and so that sort of fundamental love of math is what helped build Renaissance Technologies into such a massive investment firm. And so this is an absolutely fascinating 13F to look through. They sold approximately a third of their Palantir shares, and they sold a quarter of their Nvidia shares. And this is a general sentiment throughout the entire market. Another company, Softbank, has sold its entire stake in Nvidia for $5.83 billion. Softbank owned Nvidia for a very long time, and they sold their entire stake in the company. If you don't know anything about Masayoshi Son, he's the sort of investment leader guy at SoftBank. If you don't know anything about SoftBank, basically they go all in on whatever the newest technology is, right? A couple of years ago, that was cloud. A couple of years before that, it was, they would have invested very heavily in the internet bubble. They just go all in technology, in whatever technology is booming. And so it's very interesting for SoftBank to be selling its entire stake in Nvidia. Along with SoftBank, Peter Thiel has cut his hedge fund has dumped its Nvidia stake. This is Thiel Macro. This is the actual firm that Peter Thiel runs. Tesla, they cut back a little bit. They cut 3/4 of all of their Tesla shares. They bought into Microsoft and Apple, but they sold their entire stake in Nvidia. This is very interesting. So what does this say, right? One of these individually probably doesn't make that much of an impact, right? Renaissance Technologies, they're a quant firm. It's all math. It sort of makes sense for them to sell out of Palantir. It's had a massive run up. It's going to be continually harder for a $500 billion company to turn into, a $3 trillion company, right? 600%, you can go find that somewhere else. Maybe in Roblox, maybe in, what is this, VeriSign? Yeah, maybe in VeriSign. But when you also have SoftBank, the company that goes all in whatever the biggest technology is at the time, they're selling Nvidia. That's a little more concerning because SoftBank selling its entire stake in Nvidia, maybe that is top. And then Peter Thiel, a guy who has direct insight into what's going on in the AI space, he is also cutting not only Tesla, but also his entire Nvidia stake. All of these factors, I think, combine into a very interesting outlook on the markets. What's kind of going on here? Is Nvidia really peaking here? Nvidia's had a massive run. Palantir's also had a massive run. Maybe SoftBank, Peter Thiel, and Renaissance Technologies, maybe they just feel like all these companies have had massive runs and they're not going to run that much more, and there are better opportunities in the market. Tiger Global Management. Tiger Global is another kind of hedge fund that invests very heavily in whatever the most popular technology is, very much so like SoftBank. But Tiger Global, what they try and do a lot is they try and create great investment analysts. Like you go to Tiger Global, you study, you learn, and then you go out on your own. These are called Tiger Cubs. So a very famous Tiger Cub, maybe the most famous Tiger Cub, Bill Huang, was a Tiger Cub. He was of Tiger Global Management, and he had a company called Archegos, and he blew it up. He bought a bunch of Viacom, Baidu, investments levered 5-1, incredible amounts of leverage. When the stock started to decline, he got margin called. The brokers that he was using, UBS and Credit Suisse, he was like, "No, guys, I know what I'm doing," and he didn't liquidate. And then Archegos lost everything, and then Credit Suisse also lost everything. Tough way to go. This is not as interesting, but their sort of largest positions, Microsoft, C Limited, and Google, they have not changed. They bought a little bit more Amazon, not really all that much, and they sold a giant chunk of their Meta shares, which they've owned since Q4 of 2016. So they've made a lot of money on Meta. So not a ton of change here in Tiger Global Management. They still like their technology companies, Microsoft, Google, Amazon, Nvidia. Berkshire Hathaway made waves. This is the final 13F with Warren Buffett as head of the company. And their final 13F sees them selling 15% of their Apple stake, and they sell 6% of their Bank of America stake. And in return, they upped their stake in Chubb Limited, which is an insurance business. And then they also initiated a brand new position in Google, almost 18 million shares. Berkshire Hathaway has never owned Google. And so, while I am somewhat suspect of Warren Buffett actually having a hand in owning and actually making the decision to buy this company, Warren Buffett has talked very positively about Google in the past. He talked about how he sort of, I believe it was 2017 annual meeting, he talked to the guys at Google and he was very impressed at what they were able to do with what they were doing, and especially with Geico, the amount of money that they were making based off of ad search and all that. Another really interesting change, this is something that I was looking at last night. Berkshire has upped their ownership in Sirius XM. This was something that I tried to figure out last night. I could not do it. I do not understand this purchase at all. SiriusXM seems like it's losing its subscriber base while it's paying a gigantic dividend, and that dividend is growing. SiriusXM, it just doesn't seem like a great business. But I'm sure the ever enigmatic Warren Buffett knows more than me, a humble investor. And then also 13% increase in Domino's Pizza. Maybe an increase on the news that Domino's Pizza might be getting acquired soon. Fundsmith. Terry Smith, the UK-based investment fund. It's a bit smaller. Not too many people know about Terry Smith. He's one of the sort of lesser-known big super investors, but he's always had sort of an interesting portfolio, and it looks like he's mostly just doing a lot of selling. He's dumped 2% of his investment in Stryker Corp, which is a healthcare company, and IDXX. The big sale, 7.5% of his Google stake, he sold that to Berkshire, probably. He cut his Microsoft position in half as well as cutting his stake in Meta by 56%. And Philip Morris by 21%. He's picked up some sort of interesting companies as well. He picked up Zoetis, which is a healthcare company that makes healthcare specifically for animals. He increased his position in Intuit. So it sort of makes sense. He's just trimming his positions that have run quite a lot, and he is reinvesting that capital into what he sees as businesses that might have a little more room to run. Himalaya Capital, if you don't know who it is, this is absolutely fascinating. Li Lu is the chairman and chief investment officer. This is such an interesting 13F. He has not bought or sold anything. Nothing. 16% of his portfolio is Google, 18% in Pinduoduo, 16% in the other shares of Google, so over 30% still in Google, 18% in Bank of America, 16% in Berkshire Hathaway, 11% in East West Bancorp, so a bank, 2% in Occidental Petroleum, and 1% in Apple, and 1% in Sable Offshore. He has not bought or sold a single share of anything in 3 months. He's just kicking back. He's like, hey, you know what? I was right, and I continue to be right. All these companies are performing very well. He's got conviction, and he's sticking by it. And finally, for our 13Fs, we got Baupost. Baupost is run by Seth Klarman. He's very well known as a value investor. He has some movement in his portfolio. He has upped his stake in restaurant brands. This is now the largest position in his portfolio. He has doubled his share in restaurant brands. What he sees in that, I have no idea. He has cut his Google stake by 30%, also probably selling those shares to Warren Buffett. Elevance Healthcare, he has doubled his position there as well. Across a lot of 13Fs, it looks like a lot of these guys are sort of trimming back positions and reinvesting in other opportunities because they've made a lot of money on these tech companies. One of the most interesting parts of this whole 13F is a brand new position. UNP, Union Pacific, the number 6 position is an entire portfolio. This is a railroad. Why did he buy it? Well, we're going to get into it in the next video. To spoil it for all of our investors here, Union Pacific is merging with Norfolk Southern in an $85 billion deal. A very interesting addition to the portfolio. A lot of very weird stuff is happening in 13Fs right now. That's sort of what's going on with all of the big 13Fs from all the super investors. What's going on? Who knows? Maybe we're at the top. Maybe we've already peaked. Maybe we're already on the way down. Who knows?